This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Crude oil prices have stalled as the wave of hedge fund buying that helped lift them throughout July and the first part of August has been replaced by gentle selling. Hedge funds and other money managers sold the equivalent of 30 million barrels in the 6 most important petroleum futures and options contracts over the 7 days ending on August 22. Nearly all the sales were in crude, minus 29 million barrels, with sales of NYMEX and ICE WTI, minus 16 million barrels, and Brent, minus 13 million barrels, according to position records filed with regulators and exchanges.
Fossil fuels produced just 33% of the EU's power in the first half of this year, the lowest share on record based on data going back to 1990, researchers said on Wednesday. The main reason was lower electricity demand, which meant rising renewable energy output could meet a bigger proportion of electricity demand, the think tank Ember said. Mild weather, consumption-cutting policies and high gas and power prices, in the wake of Russia slashing gas deliveries to Europe last year, have encouraged industries and consumers to curb energy use. EU power demand in January to June was 4.6% lower than the same period in 2022, and the 33% generated by fossil fuels was down from 38% in the same period a year earlier.
Moving on to the top news in the energy sector.
Saudi Arabia may raise prices of all crude grades it sells to Asia in October as the world's top oil exporter is expected to extend its voluntary output cut for a third month, keeping sour crude supply tight and prices elevated. The October official selling price, OSP, for flagship Arab Light crude could increase by about 45 cents a barrel from the previous month, according to 5 refining sources surveyed by Reuters, which would be the grade's highest price so far this year. Market participants and analysts expect Saudi Arabia to extend an unilateral voluntary production cut of 1 million barrels per day, BPD, to October as the kingdom targets drawing down global inventories further.
The U.S. Environmental Protection Agency, EPA, has issued an emergency waiver in El Paso County, Texas of rules governing gasoline vapor pressure linked to ozone pollution, or smog, due to a fuel supply emergency caused by unplanned outages at 2 refineries. The waiver will be effective from August 28 to September 16, EPA said. The Texas Commission on Environmental Quality, TCEQ, requested the waiver on August 26 on behalf of Texas Governor Greg Abbott. The regulation being waived requires gasoline sold in the El Paso area to have a read vapor pressure, RVP, of 7.0 pounds per square inch, the EPA said in a statement on Monday. Next, we have the top news in metal markets. Iron ore prices have rallied despite flagging steel demand from the ailing Chinese property sector as Chinese mills maintain output in the absence of a firm government production cap and replenish low inventories of the raw material. The rising prices are a boon for global miners such as Vale and BHP and bolsters BHP's view from last week that China, the world's biggest iron ore consumer and steelmaker, will still produce more than 1 billion tons of steel this year. The surge runs counter to recent lackluster Chinese economic data and is occurring even as companies in the property sector, the biggest steel end users, contend with debt and cash flow issues.
Brazilian miner Vale SA sees declining steel demand in China, the world's largest producer, but the situation is not as dire as some indicators suggest, the miner's vice president of Iron Ore Solutions told Reuters. Vale is cautiously optimistic about the largest global consumer of iron ore, as China's economy has proven resilient, despite uncertainty surrounding possible stimulus measures to achieve growth targets, the Vale executive, Marcelo Spinelli, said. We can see that there is demand for steel. It's declining, but not to the extent that some isolated indicators show to some analysts, Spinelli said.
We will now look at the top news in the agricultural sector.
India has allowed traders to ship out the non-basmati white rice cargoes sitting at ports due to a sudden ban on exports of the category, a government order said late on Tuesday. On July 20, India surprised buyers by banning exports of widely consumed non-basmati white rice to control rising domestic prices. The move followed a ban on broken rice exports last year. The export ban trapped thousands of tons of non-basmati white rice at ports, leaving traders facing losses. The Directorate General of Foreign Trade, DGFT, a unit of the Trade Ministry, in its latest order said it would allow shipments of trapped cargoes provided traders paid the export duty by July 20, when the ban was imposed. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.